Hi, Kevin Coop here,
And Tom Furphy.
and this is the Innovation Conversation. Again, we're in the same place at the same time. This is just totally getting to be a habit.
This is a lot of together
But
time.
but it's a good time to be together because and this story kind of broke at the end of last week. Some congratulations are in order for companies that you do work with, and yes, these are companies, by the way, that are Morning Newsbeat sponsors. But we want to illustrate a larger issue here. So tell us what happened last week.
Yeah, so we were able to announce a financing basically across our portfolio, and the two most kind of important companies that you'll hear us talk about. It's a company called IdeoClick that is an Amazon agency helping a couple, well, almost 250 manufacturers go to market through Amazon, and then also Replenium, which is our auto replenishment platform. We were able to find an investor.
Replenium being subscribe and save for everybody else.
Yeah,
Is the
subscribe
way I
and
like
save
to-
and predictive auto
Right.
replenishment and kind of some more additional capabilities as well. But yeah, it's more automating routine purchases. Yeah, we were able to find an investor in GLP, so you can look them up, spelled GLP, and you can find them. Traditionally they're one of the largest logistics REITs in the world. So they've made massive bets on logistics infrastructure. And and kind of recognizing where the world is going, they're starting to make some further bets, kind of around logistics and kind of around how businesses are changing and how they relate with that. And we're really excited for our partnership with them and these companies, and then ultimately in some other things we're going to be doing with them as well.
So I know this is not a short-term process. It takes a
Mhm.
long time to make these things happen. You had hair when you started this process. No, I'm just kidding. Anyway, the I'm interested in the idea that I'm interested in what you found when you were out there talking to different companies.
Mm-hmm.
Did you? Is it your sense, because you're talking to companies about financing, you're really getting a different maybe view of the marketplace and the landscape than you might if you were just doing business on a day-to-day basis.
Mm-hmm.
So what did you find?
So we have our overall investment thesis at Consumer Equity Partners, which is our venture fund, is we imagine a world where Amazon's 25% of retail, right? And when Amazon's 25% of retail, what does that mean? And that creates investable opportunities, both on the helping the world kind of work with Amazon, right? So if I'm a brand, I have to sell through Amazon, or I want to sell through Amazon. If I'm a merchant or seller, how does that work? And how do we optimize working through this behemoth that is Amazon? And doing it well and doing it in the best interest of the company, not necessarily only in the best interest of Amazon, and using technology and services and expertise and all that stuff to deliver that. And then also our thesis is around building counter strategies to Amazon, right? So how does the rest of the world stand up to Amazon, in a world where they are, this kind of catalytic force for change, right? So it's different business models, different technical capabilities, different ways to look at loyalty, those kinds of things. And so what we were finding, there's been definitely an evolution. We're very patient investors, right? It's our capital. It's a network of investors that we know that we fund into these companies early, and we build them with a very long vision. You hear Jeff Bezos talk about, I encourage the team to think in 5 to 7 year timeframes, right? And then when we get a business result, well, that business result was baked 3 years ago. So that's kind of the way we think about building these businesses. So we've spent a lot of years when we develop concepts with a lot of people not recognizing, that's where the puck is going. And being on both the kind of pro Amazon side and the counter Amazon side, we get to kind of see both sides, and we get to kind of take cues from the market about where the consumer's going, where the consumer could go, and investing toward that. So we take a little bit of a longer view. Silicon Valley traditionally has a shorter term view. So you see a lot of kind of trend du jour, right? So it might be, subscription services, around meals, or it might be delivery, or it might be, central kitchens, or, and while some of these are good and may have long-term potential, what they do is they create a lot of buzz and they create a lot of short-term capital. The market doesn't necessarily embrace them, and then the business models break. So we take this longer view. We like the fact that we have an investor like we have in GLP that has significant capital resources, has a long-term view. And I think what we are seeing is there are a few really sophisticated investors that have, you know, a lot of available capital, have a long-term view, have a very informed view based on a lot of data and based on a lot of experience. And I think you're going to see some bets being made in the next few years by these big players. And we certainly at CEP will be playing in that as well. You'll see some bets that will really help the industry move the needle.
So there is if only because maybe the capital is taking it more seriously, taking a more of a long-term view. Are we at a point where, you know, there's a more serious shift taking place? That, you know, I'll mix my metaphors here. You know, is the train really leaving the station at this point? And if you're not on it, or at least have a ticket,
yeah,
you're in deep trouble.
Yeah, I think for years you've talked about the force of Amazon, right, and how everybody should pay attention to it. And to varying extents, retailers did or didn't, you know, listen to that. But I think now you look at Amazon's overall market share in various categories and in retail overall, it's absolutely at a tipping point. You know, there are some categories where Amazon's in apparel, Amazon's the second largest apparel retailer in the U.S. after Walmart. You know, so they are redefining that category. You know, I think if you look at where they are in grocery, it's still the early days, at the early innings. But you look at what they're doing on the .com platform, you look at what they're doing with Whole Foods, you look at what they're going to be doing with Go formats, and then you look at what they're going to be doing with this new grocery format. There will be significant change there. So I think what you're seeing now is we're at this tipping point. There's a sense of Amazon is really credible. The consumer is responding to what Amazon is offering, and as a competitor, I need to stand up to that, and I need to understand my shopper and be able to offer these capabilities, you know, kind of more readily.
Or not, but I guess my argument has always been that if you're not going to offer the same kinds of capabilities that Amazon has, you damn well better know how you're going to compete with the companies.
Absolutely, yeah.
And right? You don't have to do the same thing.
Yes, absolutely. You don't have to do the same thing. I definitely don't want to make it sound like that. Right. I think what Amazon is really good at is obsessing over the customer and then innovating, you know, back through the business model to not be constrained by tradition. Right. I think that that's a mindset that any customer-centric retailer should take. Focus on your customer. Don't be constrained. You know, but there's certain things you need to be constrained by, like you have locations, you have stores, you have, you know, some general aspects of your business model that can only change so much. But you should not be afraid to lean into innovation in understanding that the shopper is changing. The shopper's getting younger, you know, or I should say younger shoppers are becoming, you know, more of our purchase dollars as retailers. They think about shopping differently, right? There's shopping and there's buying. You know, you buy and procure one way, you shop another way, right? Shopping is absolutely experiential. Buying and procuring is not necessarily experiential. So I think as we think through kind of what that means, how that impacts our stores, how that impacts our supply chains, you know, what that means for delivery, you know, I think it's, and how much of that do I want to own versus how much of that do I want to put on a third party? And if I'm putting it on a third party, you know, it better be a third party that shares the data with me and is an extension of me, not a replacement for me.
But it's interesting. You talk about companies having to being constrained in certain ways. You know, I bump into companies, retailers lately. I've been to a bunch of stores that are new stores, and there seems to be no recognition in some of these stores that the world has changed, in the sense that they're not laying in the infrastructure, even if not for now, but for later, so they can say, okay, if we're going to do delivery, this is how we'll do it, right? Because that infrastructure is really hard to retrofit. There's not a recognition. Ooh, we better figure out, if we're not going to do click and collect this week, how are we going to do it in a year if we need to do it? And so they're building stores that in some ways are obsolete, and I don't understand that. At the same time, I bump into manufacturers from time to time who are just now saying, well, you know, maybe we ought to do recipes on our website. Maybe we ought to have videos, but I'm not really interested in doing things like consumer reviews. Right. Even though those are the things that in a lot of ways drove Amazon to be successful. And it's not that you're imitating Amazon, but you're recognizing the power of the consumer.
Absolutely.
You're recognizing the power of social media, and you're saying, okay, how do we build this into our model to generate more, not just transparency, but greater loyalty?
Absolutely.
Right? Greater relationship between me and the customer.
I was in a meeting the other day where we were looking at a number of brands across a number of categories and looking at market share changes. And the general theme was brands that were increasing in share had better online presence. So they had better content, they were present on Amazon, they had widespread consumer reviews of their product showed up a lot in social media and discussion forums. The next generation of shopper, well, it absolutely wants to rely on the retailer and wants to rely on expertise, but they also look to the community for expertise, right? They look out to social media. The collective wisdom of folks that have used the product and experienced the product, to them holds more weight than a single stated brand promise, or something maybe that a doctor prescribes or recommends. And so I think this next generation shopper, the way that you influence them through this kind of discovery process, it's different than it has been in the past.
Well, and listen, I've been writing this forever. It feels like that it's important not just to be a source of product, but to be a resource of information for the shopper.
Absolutely.
But that doesn't mean all the resource. You're the entire resource. What you really need to do is open the world
Be
to
the
the
platform
consumer.
to that resource. Absolutely.
Right? Because I think that just gives you greater credibility
Absolutely.
in the marketplace. Well, congratulations again on the funding. I think it's fascinating how that sort of it presages major changes that we're going to continue to see. I think sometimes people sit around and say, "Oh, come on, we've seen pretty much all the change we're going to see."
Yeah.
Inevitably, that's probably not true.
I think it's going to be really interesting to watch investments in shopping capabilities, investments toward kind of what is this next generation of what loyalty looks like, investments toward kind of new supply chains and logistics infrastructure and fulfillment. And I think the investment's getting smarter. And I think this availability of capital is a really good opportunity for retailers, not necessarily to bear all the burden, right?
Yeah.
That there is a network of financiers and partners out there that can really help them, kind of navigate into the future.
Well, it's like the advertisement for the lottery, right? You can't win if you don't play. Right. Absolutely. Anyway, that's this edition of the Innovation Conversation. I'm Kevin Coop.
And I'm Tom Furphy.
And we'll see you next time, everybody.